In this video, traders, let's look at a strategy that we could potentially employ to trade for the first 5 minutes of the open. Stay tuned. Hey guys, warm welcome to you. Right, so subscriber comment came in and said, hey, if you had to trade for the first 5 minutes of the day, what would you trade and why? Initially I'm thinking, 5 minutes is a very tight time window, but my intuition said, right, this would work more often than not, I think. Now, this is a warning, guys. This is just literally me talking about something that's come to the top of my mind. I've not back tested this. I've just thought if I had to trade for the first 5 minutes of the day, if I wasn't allowed to use tape and look at price momentum, short-term price movement, I would probably use these set of rules as a method of getting onto the institutional potential money flow at the open, the drive, the momentum. So let's have a look at some examples. We'll have a look at S&P in a minute. I've got DAX up here. So this is DAX futures contract. I've got a continuous contract from TradingView and opening up at 8 o'clock UK time. They open a little bit early, the futures, but if we talk about when the stock exchange opens, we want to be aligned with that. Same with the S&P 500, the NASDAQ futures, etc. We want to trade it when the underlying's open. So my strategy would be this. If we have a 5 minute window to trade, I would look for the first 1 minute candle to print. Yes, I know some people are going to say this is crazy, you are very, very short term, but listen, just humour me. This is kind of just answering the question. I love thinking about potential strategies and things like this. Maybe one of you guys out there who's a genius at backtesting and stuff will backtest this and go, hey, it's the worst thing in the world, or it's the best thing in the world, and you probably won't. You probably keep it for yourself. But anyway, this is what I do. I wait for the first 1 minute candle to print. So in this example here, 8 o'clock, we've got high and a low printing. Let me just open up here. Okay, so we've got the high there of 12,922, low 12,908. So what you would do is you bracket that high at 22 and the low at 12,908. You go long then if we broke above the high of 12,922, and you go short if we broke below the low of 12,908. And once you triggered that entry, you would then close it at the end of that 5 minute period. So it's the close of the 804 bar in this example. It's going to be different if we look at the US. So here you go short here. Now listen, guys, I appreciate there's loads of slippage, loads of reasons why this wouldn't work, loads of reasons why it's a challenging thing. But hey, you know what? If I had to come up with something, this is what I would trade. I was forced to trade something systematic at the open. This is what I would do, because I know that for every stop out you get, every so often you're going to get a really big drive, and the basis of the rules are here, and you would probably want to add more and more filters and rules to avoid any nasty surprises. But anyway, this example, you'd go short here at 08, 07, 06, whatever you got filled at. You close it at the 04 bar, which is down here, and a close of this is 893. So one sample size, guys, that's not too bad. Let's have a look at another couple and then we'll look at the US. But you can see the theory of it. The theory is that if we get an open and it drives hard, which often it does, if you're a trader who's watched the open much, you're going to know that's exactly what happens at the open quite a lot. Here's one here, guys. So we've got the high here, so you're in here. This is probably going to be a bit tight. This wasn't 805, and then you're closing it at the close of the 4. The close of that is 12. So technically there's 7 pips in that. I'm not sure if you get that or not. Let's look at one more, and then we'll look at the ETFs for the US market and just see if that kind of similar thing happens. So here again, this is probably where you'd add a filter, to be honest, and say, hey, if it was a big wide bar, I wouldn't take it. But anyway, here you go. You'd be short here, and you'd be close at 693, and you'd be closing at 804 close, which was 75. So almost 18 ticks or whatever it is in that. So that's that. Let's have a look at. Let's go to the SPY, and let's look at 1 minute on the SPY. Same thing. Here's when you probably wouldn't be doing too well, because you'd go in at the close of this bar here, or the high, sorry, and then at 4, which is here, you'd come out and you'd end up getting a loss on that. But this is where you get some filters perhaps and say, okay, well maybe I have a stop at the low of the first 1 minute bar. That's exactly what I probably would do. I'd probably say, okay, I'm looking for momentum, and if it doesn't have momentum, I'd probably even add another filter, guys, to say, hey, if after the first 2 minutes we didn't have momentum, then back off the throttle. and don't take it, and make sure you come out of the position. I don't think that if your play is to play the first 5 minutes momentum, and as I say, this is probably not something that you would trade, but if you wanted to experiment, maybe it's there. This one didn't really get going, and you probably end up being a flat position. Let's look at some more. Maybe it's better on some of the more volatile indices as well, like QQQ and DAX is particularly wild, isn't it? QQQ here, you'd have one here, a swing down. That would have been a nice little profit for you there, closing at 14.34 close, which is about there. So look at one more, and I think you get the idea. And we'll talk about maybe some rules we could do with it. Here, you'd probably have been in short here, and you're out. You probably would have got away with that one as well. But anyway, guys, literally just thinking about things, I think that there is a possibility to get on early momentum. I think you've got to be careful trading open because you can get sucked in and flip-flopped around. But I think that, every now and then, if you manage the risk, and like I say, that's something to be thought about, whether you have a stop above the high or low of the first 1 minute bar, however you manage that, there's something there. But if you got on the end of a good one, that could end up making your week, your month, because sometimes that first 5 minutes is a real ripper. And then you might even add more rules that say, hey, this is a trailer, I've got a trailer on, I kind of run a really tight stop with this, I ratchet it down. It's something to think about. Anyway, so I appreciate the question, whoever sent that in. I haven't got the print out here with me, whoever it was, but you probably know who you are if you've listened to this and you recognise the question. I appreciate all your questions, comments and support. Guys, check out the link in the description below if you want to see what our channel sponsor is all about. Otherwise, take care, keep your risk manageable whatever you're trading, day trading, swing trading, scalping. Risk. Stay in the game. Take care. Bye-bye.